Welcome back, viewers. Today we will be testing moving averages. But before we do, if you have not watched my first video and the videos after that, you need to go do that right now. Here at the Academy of Forex, we are building the best trading system possible as a team, and as a team, we will all profit from it when we are done. You can find a link to the first video down in the description below. You can also find a link to our Discord server, so that way we can all discuss testing indicators and building our trading system. And lastly, you can find a link below to TradingView. If you sign up for a paid account, you will save a little bit of money using the link below. Alright, now that we have all that out of the way, let's get to the indicator of the day. We are going to test moving averages. First and foremost, we are going to test just a standard, everyday, regular moving average. And like most indicators, there are multiple different ways you can trade an indicator. Most of the time when I do a video on trading an indicator, I stick to one way of trading it and only one way, and then I let you guys take it from there and test it in different ways. I feel like with moving average, it deserves at least 2 videos. And that's because there are 2 very popular ways of trading moving averages. First is the, let me set this to make it a little bit quicker there, set it to 15. First is the price break of the moving average. And that is when the price breaks below, you go short. When the price breaks above, you go long. Of course, you can add longer moving averages in to determine overall trends, so on and so on. I mean, there's tons of different ways you can use moving averages. And if you do a quick Google search on it, you will find many ways. The second most popular way of trading a moving average is the moving average cross. And that's where a faster moving average crosses a slower moving average and would be a buy or sell signal. Like I said, I feel like both of these are very popular ways of trading the moving average. So we are going to do a video on moving average price break and then a moving average crossover. Now, with that being said, there are quite a few different moving averages as well. You have just your standard everyday moving average like I have here, exponential moving averages, you have weighted moving averages, and so on. So, in this particular case, I'm going to use just your standard moving average. I know in one of my previous videos, I mentioned that we should put a, no pun intended, heavier emphasis on weighted indicators. But in this case, I have found that a weighted moving average, so let's just put one up here for the sake of demonstration. 15, let's turn it to Let's do the right, see if we can get it to stand out there. Okay, so here in red is a volume weighted moving average. Here in blue is your standard moving average. And so as you can see, it does put a slight emphasis on the direction, the volume of a move, but in my opinion, not so much so that we should really be concerned with whether we're using a weighted moving average versus a regular moving average. I mean, honestly, most of the time when I talk about a weighted indicator, it's because it would either keep me in a trade longer or get me out of a trade faster if it's not going, the right way. They seem to come back together right as price action is slowing down. And so my opinion is that it's really not helping us out a whole lot when it comes to a moving average. So, okay, now that I've rambled on about all that, let's get into testing it here. As usual, I have just picked a random pair. I am going to scroll back here a few years. Let's do 2017. Let's find here January 2017. We're going to start our replay function. Here in TradingView, again, one of the reasons why I love TradingView is the replay function. Just kind of keeps you honest when you're back testing, rather than just eyeballing these and going, well, sometimes you get a little bit biased. So, that being said, cross above will be a buy signal. A cross below will be a sell signal. I can already tell right there on that one. Picked up a loss pretty quick. Stop loss and take profit. Let's see. So our take profit is 90 pips. This, of course, is designated by the ATR. Again, if you have not watched my previous videos, you will be lost by what I mean by this. Again, I recommend you go back and watch those videos so you understand what I mean. 135 will be the stop. Again, designated by the ATR. All right. Looks like this one right here was a win. Cross there. Wonder if that didn't stop us out. Yeah, that was a loss there. That was a win there. Of course, as I have said many times before, there are many different ways of trading indicators. I'm sure there will be people watching this who claim that I am not doing this right at all, which is fine. Everybody's entitled to their opinion. If we are not doing it right, join us on Discord and show us the right way to do it. Of course, follow our take profit stop loss setup, and need to have at least a 60% win-loss ratio. But if you can show us a good way of trading the moving average that has a lot of success, then we are more than willing to listen and test and try. Here is something that I run into from time to time. Anytime I have developed a system revolving around price action crossing a line, I almost never count candles, and I guess this one would have been darn close. I almost never count candles like this where they close on the line. I want it to be a clean close below or above. I don't like this one right here was clearly closed above. I don't want to, kind of assert those moments where it's half and half, and I'm looking at it and thinking, well, this kind of looks like a good setup, and so I'm going to take it. And then on the next one, I think to myself, well, it doesn't quite look like a good setup. Again, we need to leave the bias out. We need to have a no-brainer, absolute, no question asked signal when it comes to entries. Here's another one. Another thing that when it comes to a single line cross, when you get a signal to go one way and then it turns around and gives you a signal the other way, you have to stop out of that trade, regardless of whether it's hit your stop or not. If it's giving you a signal in the other direction to enter a trade, then you should be stopping out of that trade. Again, that's how I've always looked at it. That is my opinion on the matter. Again, my opinion is not set in stone. If there is a better way, then that is what we are here for. So we can all learn, so we can all grow, so we can all develop a system that works and is efficient as possible. Okay, we have that one there. Then we have the break here. Then it turned around and dropped out on us. Let's see, turned around, took off there, gave us a signal here. And if we got our, we got it super close. Let's see. So we are at 124.92. Our target take profit would be 125.82. The high of this is 125.75. So no, we did not get it on that one. Let's play it and see what happens. Ooh, boy, it sure did take off right there, didn't it? So we got it on that one. Again, as I've said in the other videos of testing indicators, the candle that breaks the line has to close. So that is our signal candle. Our entry candle would be the next one after the signal candle. So you always wait for the close of the signal candle. You never enter a trade until that candle has closed. Another loss there. This is going to be close. Keeps going at this rate. Let's see, loss there. We had a break here. Wonder what that one did. Open there. Yeah, we'd have been fine there. You got that there. That one. This one here. Not quite a stop yet, but definitely took it out there. As I've said in other videos, the moving average is giving us a lot of signals. And I've said that we need a lot of signals for an indicator to be logical to trade. There's a thin line between a reasonable number of indicators and over trading, where you are just getting a ridiculous number of signals. And it is my opinion that at a large enough number of signals, you are basically just gambling at that point. I mean, you can go to Vegas and throw all your money on red, and you're basically doing the same thing. It's what we call over trading. We don't want to overtrade, don't want to undertrade. We want to find a happy medium where we're getting good, clean signals on a regular basis, and not a indicator that is so sporadic that is just throwing signals at us constantly. Especially if those signals don't have a good win-loss ratio. Boy, and this thing's just throwing gobs and gobs of signals at us. Things like the Energizer Bunny, it just keeps going and going and going. Just signal after signal after signal. It's like some are good, some are bad. I mean, at this point, it seems to be about a pretty even mixture between green and red. We'll see once we tally it up here, but and this is another reason why I trade on daily charts. I have had systems that used the moving averages as my signals. And I've traded those on a 1 hour, 2 hour, 3 hour setups. And I tell you what, it will drive you insane. As you get these same results where it's just in and out and in and out and in and out. You enter a trade, you close a trade. You're in a trade, you out. It goes back up, you close the trade. You enter a trade, it goes back down. You close the trade, you enter the trade. Ah man, it will just. It's enough to make you nutty. I found that trading on the daily time frame often gives you better results and doesn't keep you tied to your computer like a slave. Of course, if you have nothing better to do, you are okay with camping in front of your computer. That is perfectly alright as well. I think that is the end of the year. Man, look at all those signals. Wow. Alright, let's see. Let's tally these signals up here. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23, 24, 25, 26, 27, 28, 29, 30, 31, 32. Alright, at 32, we need at least 20 winning trades to meet our 60%. So, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15. Look at that. Like I said, it's almost a 50-50 split. on these things. And again, that's exactly what I said. At a 50-50 odds, I mean, you can go and, lay your money down on the table at Vegas and you have a 50-50 chance of, winning or losing. So at that point, you're basically just gambling. Man, goodness sakes, where do I start with this? So, obviously, it does not meet the criteria that we're looking for, and it is giving us a whole bunch of signals. Of course, we could increase the time frame of the moving average. Will give us less signals. Could give us a little bit better signals. But I have found that around the 20 to 15 moving average is, when you start going farther out, 30 and 40, you end up with very few trading signals. You end up missing out on a lot of kind of short-term trends like these right here. Like these kind of trends right here, or these kind of trends right here, because the moving average is just moving so slow. The other thing that I don't like about the moving average for an entry indicator like this is it does not filter out the chop in the market. Of course, if we had a tool to do that, it might filter out some of these bad trades. But man, you'll find that moving average will give you a reasonable amount of good trades, but when the market goes choppy on you and is just going sideways, we really in this year didn't even see any real bad choppy market. Nothing like this right here, be it this long drawn out period of choppiness. Man, those will just eat you alive with a single line entry indicator like this, where it will just, you'll get a signal to go long and then it'll turn around and give you a signal to go short, and you're just taking a loss every single time it does that. Then it'll turn around, tell you to go long again. You'll have to close out your trade. Just like I said a moment ago, it will just whip you back and forth and back and forth. It'll make your head spin, and it will eat up all the good trades, all the good profit that you got with these little just nickel and dime losses over and over and over and over and over. That is my problem with the moving average single line price action break. So again, with that being said, it does not meet our 60% criteria. I have never had a truly successful system built around a moving average cross. I've tried and tried and tried multiple different ways of making it work, and I've yet to find a way that is profitable in the long term. Again, that's my opinion, that's my experience with it. That doesn't mean that it can't be done. So with that being said, this video is getting long enough. I am going to throw it over to you guys to play with, to test if you already have a system in place around the moving average that you can produce a 60% win rate on it using our take profit system and stop losses. Then again, we're all ears. Throw it out here. That's what we're doing. We're thinking outside the box and getting everybody to, try things in different ways to see what we can come up with. See if we can make bad indicators into good indicators. But this is one of those that if you Google, Forex, trading indicators, best Forex trading indicators, you are bound to run across somebody telling you that the moving average price break is, the way to build a system, type of deal. Um, just in my opinion, I've never found a good way of making it work. I have found better ways, I guess I should say, to, that filters out, chop, and does other things. So, all right, like I said, I'm going to throw it over to you guys. I'm going to cut this video here before it gets any longer. If you have not already, like this video, comment below, subscribe to the channel, and turn on the bell notification so that way you are notified anytime I post a new video. As part of the team, it's important that you are seeing the new videos as they come out so you know what it is that we are discussing and what indicators we are testing, have tested, and have not tested. Also, like usual, there is a link below in the description to the Discord server. You can join us on Discord so that way we can further discuss the indicators and have discussions as we move forward building our trading system. And lastly, like usual, there is a link below to TradingView. If you like what you see whenever I use TradingView, and you are interested in signing up for TradingView, if you use the link below and sign up for a paid account, you will save a little bit of money. So, all right, everybody, I will see you on the next video.